Ladies and gentlemen, welcome. My name is Dvorkin, and I'm a managing partner at 4D Capital. We specialize in a very unique mathematical approach to the stock market, where we analyze the market and individual stocks in multidimensional space, and when we do, essentially perfect order emerges. On top of that, we've developed a number of very powerful timing indicators, and when we combine both of those factors, we can very often predict what the overall stock market or individual stocks will do going forward. And we can typically do it on multiple time frames. Whether it's short term, long term, doesn't really matter. I personally believe our work is linearly identical to what Jim Simmons was able to accomplish at Renaissance Technologies, if you're familiar with Jim. So today we have quite a few things to talk about. We have the overall stock market. We have our new fast mover. We're going to talk about Michael Burry and the feedback that he's getting from the market in terms of his very large short position. We're going to talk about the overall overvaluation of the market, as well as we're going to look at the Bitcoin. That's the last thing we're going to do, and how we were able to predict the exact top for that particular instrument. So let's jump into it and start with our fast mover. Our next fast mover is going to be Under Armour. But before I do that, let me just very quickly give you a concept of what a fast mover is. Okay, so what you see on the chart in front of you is what we call cycle composites. I'm not going to go into detail and describe to you exactly what it is. I typically do it in my other videos. I'm just going to simply indicate that our software has the ability to, it's a very simplistic representation. Because I had a couple of people say, well, what are these triangles? It looks stupid, it looks very simple. Well, it's a very simplistic representation of a very complex mathematical concept. And basically what we do is we scan the chart back in multidimensional space, we identify these composites, and we project them into the future. But point being, in terms of the fast movers, is that what we found out over the years is that when we have a very short period of time between a major cycle top and major cycle bottom, it is typically during that period of time that a very powerful move either to the downside or to the upside will take place. So this is a long-term chart for the crude light oil. And as you can see here, we had a major cycle top right here in 2008, I believe. And then a couple months later, we had a major cycle bottom here. And that's a perfect illustration of a fast mover concept and how this stock went from a major top to a major bottom. And same thing here, major bottom, chart needs to be adjusted a little bit to a major top right here, from bottom to top. Okay, it doesn't happen all the time, but approximately 75% of the time when we have a very similar setup, the stock underlying equity or the overall stock market will move very, very fast. Okay, so with that in mind, let's take a look at our next fast mover, which is Under Armour. Once again, the stock has seen better days. If I remember, I actually thought it was quite popular, but as recently as 4, 5, 6 years ago, I know it has declined some, but I didn't realize that the peak that it had was right here at approximately 2017, I believe, 2016, 2017. Peak of popularity, I mean, or in the stock price. I guess they kind of line up with each other. But anyway, what I'm trying to suggest here is that according to our work, Under Armour is going into a major bottom that is going to occur right here in fourth quarter of 2026. I'm jumping a little bit ahead of schedule, but I just wanted to share this with you because the type of return we anticipate from this particular company is going to be massive. And we have a very clear downside target as well. So I'll share that in a second. But we anticipate a major bottom here. As you can see, the stock has been declining perfectly into this in this particular bottom. And then once that bottom is put in place, we anticipate a significant rally into fourth quarter of 2027. So a 12-month period of time, and we anticipate the stock to appreciate from, let's say approximately $3 a share to upwards to $60 a share. That's the final target. Most likely not going to be reaching this cycle iteration, but perhaps it could. It is quite possible that it will be. We have a bunch of confirmation points for that particular move to develop, including this massive gap that we have here on the chart. So the overall forecast is we're going to bottom in the fourth quarter of 2026, and then from that bottom we're going to surge much higher into the fourth quarter of 2027, 12-month period of time, where we anticipate a return on investment of at least 5, but possibly as much as 10 to 15 X on your investment. So very exciting opportunity coming up. So let me show you the price variable associated with this bottom. So sometimes our work up, once again, this is a three-dimensional representation. I'm sorry, this is a visual representation about three-dimensional calculations. And what you see here is the final target for Under Armour. It is very clear. It is approximately, let's say, $3 plus or minus a few cents. If you want to get the exact price target and time target associated with this particular stock, please request our free trial, link in the description of the video. Our free trial is going to offer will expire at the end of November, and we're never going to offer it again. So if you would be interested in taking a look at our work, please so do as soon as possible. But you can ascertain exactly where in time and price this stock is going to bottom, as opposed to a little bit more general information that I'm giving you here. And so our software is well, not our software, our approach is very cool, because not only is it able to project the exact bottom in three-dimensional space, but then it is able to turn around and tell you exactly where the stock is going to go once that bottom is put in place in both time and price. We already looked at that time variable just a few seconds ago. So let me show you what I mean. So we know where the bottom is going to be. So all we have to do is do this, and it's going to output where the top is going to be. So looks simple, doesn't make any sense to you. I mean, I'm sure of that, but makes perfect sense to us. And according to our calculations, this particular region is of great interest, and that's where we believe the top is going to arrive. So between, approximately $50 a share, 46 to $50 a share is where we're going to see this particular top. So from 3 to 40, that's at least 10x, 12x anticipated return on investment, probably more. And that's how wonderful our calculations are. By the way, it looks simple, but there's a lot of math going on behind the scenes where we can initiate these projections and ascertain exactly where the market's going to go going forward. So this is, I guess, or one thing I wanted to mention is that our software, for example, can scan the entire S&P 500 and identify only the stocks that have these kind of setups. That's where we're able to essentially every week identify not only these kind of fast movers, but we also have a selection of super equities. And it's something very similar, but on a grander scale, so to speak. So that's our next power play, so to speak. So let's switch gears and go back to and look at Michael Burry and what's happening out there in the marketplace, because not necessarily in terms of his positioning, but actually the psychological backdrop that we're currently experiencing is quite significant. So if you remember, we did a story I think it was last week, where news came out that Michael Burry, I think the movie was the Short, or very very famous movie. It skipped my mind at this point in time. So I think it was the Great Short, or something similar like that. Right. So he made billions of dollars shorting the real estate market in 2007, 2008, 2009. And became famous because of that. There was a movie made with Christian Bale playing him. So what was the name of the movie? I'm sorry, I'm just completely blank at this point in time. But nevertheless, news came out last week that according to his F13, he had a massive put option position against the market, and particularly against Palantir and NVIDIA. We talked about it last week. And we explained at that time what that particular position is going to be in the money very soon, because both the Palantir and NVIDIA, according to our mathematical calculations, were topping as we spoke. Recent market action confirms that to a certain extent, as you've seen from the movements of those stocks. But nevertheless, now I'm not sure. Some people are saying this is not true. Some people are saying that this is true. But basically, news came out, and according to his investor letter. Once again, as of this recording, hasn't been proven or unproven whether or not this is true, but he's basically coming out and saying he doesn't understand this market. He's taking losses, and because of that, he's liquidating his hedge fund and returning capital to his investors. And that would make sense essentially because the market has been climbing over the last couple of months. His F13 positions were initiated, I would assume, sometime in the third quarter, which could be in August, September, October, or July, August, September. From that period, the market increased quite substantially, and those put option positions were probably losing quite a bit of money, particularly if we look at NVIDIA and Palantir, etc. So it would make sense that he would come out and essentially kind of throw his hands in the air and say, this is over, I don't understand the market. But that's not the point of this discussion. Yes, he might, if this is indeed true, he's getting out at the top, and he should concentrate on timing. But what I wanted to kind of pinpoint or point out to you is the negative reaction from the overall investment community that we're seeing, and people essentially making fun of a very well-researched analyst, very smart analyst who has been very successful in the market over the last couple of, let's say, decades, right? Made billions of dollars, probably worth billions of dollars still. But nevertheless, this is a perfect illustration of what I'm talking about. So Michael Burry is arguably the worst investor of our generation, and this person, or RJ Capital, is calling out all the calls that he's made that he missed money on. Okay, but the most interesting section of all of this, so this is zero hedge, right? And if we go to the comment section, it kind of gives you the backdrop of the psychological setup of the market, which is very important in this case because nobody, and as is evident from the market itself, nobody is expecting any sort of a decline going forward, okay? And this is very indicative of a very major market top coming up. This is actually what our work suggests. We've been talking about it for a while, and if you follow our work in our subscription service, you very well know exactly when that's going to happen in both time and price, okay? So just a very quick sample, but it is clearly evident across the market, including this particular article, of what the psychological setup is. So trying to bet against the markets that are built on tiny hat manipulation and financial engineering is retarded, okay? Never bet against the Fed, exactly. He's not very smart. Market will continue to go up, so on and so forth. So just open you can go to Zero Hedge and open this article and open up the comment section and basically skim through it, and it's going to be one after another, basically telling that he's not very smart, or perhaps, he is indeed very smart, but essentially suggesting that don't bet against the market because the market is rigged, and it is to a certain extent. I would agree with that, but the psychological setup itself, and I think George Soros had that famous theory when everything reinforces itself. Apparently my brain doesn't work today, so I'm trying to remember the name of it as well. But when everybody believes the belief, so to speak, and it continues to accelerate forward, eventually we arrive at a point where we are today, where everybody believes the market is unstoppable, the market will not sell off, and even the sell-off that we had over the last 24 hours seems shocking to most people. Oh my God, we decreased less than 1% on the Dow Jones, and everybody's screaming bloody murder that the market is collapsing. So completely irrational expectations from a psychological perspective, which is once again indicative, very important here, indicative of a major market top coming very soon. And everybody who has this belief, which is, I would say, 95 to 99% of investors out there, will get washed out. And our fundamental picture basically supports this. This is our Shiller PE. We talked about this before, at the highest level in the history of the stock market. We talked about Buffett indicator before as well, at the highest level in the history of the stock market. And this thing we didn't talk about before, but I figured I'd bring it up to your attention as well. the margin debt, which is basically means that everyone is long on the margin, is at the highest level in the history of the stock market. You know, we look back at the 2000 top. It was so what is it today? Approximately 400% higher than it was at 2000 top, and you know, 300% higher than it was at 2007 top. So basically, investors haven't been flushed out in a long time. You know, this appears to be a pretty big decline, but you know, look where we are today. So everybody's long, everybody's on margin, everybody believes that the stock market will continue to increase well into the future. And I'm here once again warning that this is a big mistake, not only from the fundamental perspective, but from a psychological perspective. And according to our mathematical work, the stock market is indeed approaching a very important top. And once that top is put in place, it's going to decline quite substantially, and it's going to cause a lot of pain for most investors out there. So with that in mind, let's take a look at Bitcoin, because there's been a lot of news of Bitcoin, a lot of crying about Bitcoin, basically. I just want to, we're actually going to do an important update on Bitcoin in a couple of weeks. It is one of our 52 mega cap stocks that we update twice a year. But essentially what we've been saying since our last update, which was, I believe, sometime in May or April, is that Bitcoin is going to top at approximately 130,000 plus or minus 3,000. And look how beautiful. So what you see on the chart in front of you is our three-dimensional representation of our calculations, these lines. And look how beautiful it hit right into our target. So 127 to 140, perfect top in both time and price, and it has been declining ever since. And according to our calculations, once again, this bear market in Bitcoin will continue well into the fourth quarter of 2026, and we're not even halfway through this decline. So that is something to keep in mind. Just a very quick update. Once again, we're going to do a full-on Bitcoin update over the next couple of weeks. So please subscribe to this channel so you have the ability to get that update if you're interested in Bitcoin. And hopefully I don't get as much Bitcoin hate. I probably will with this video as I did with a Tesla video, that people lose their minds when you indicate that perhaps Tesla is not going to go as high as some people believe. So anyway, nobody likes a bear, correct? Until you make a lot of money. With that in mind, thank you very much for your time. Have a wonderful weekend ahead, and we'll be back with another update. Well, tomorrow's Saturday, so Monday. Bye-bye.